Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Today, we're going to be talking about the increase in Canada sales, as well as the decrease in California licensing contraction this year. On the line with us is Dan Kimmis, our CBD correspondent with Good CBD Products.
I'm standing on the line right now, Chronic. I'm right here on the line.
So this Yahoo Finance article says that Canadian cannabis sales hit an all-new high in June, but it doesn't tell the full story. So according to ArcView Market Research and BDS Analytics, they foresee the sales climbing to more than $40 billion by 2024, even though some more aggressive Wall Street estimates predict that the global sales could hit $200 billion annually in about a decade. So looking at their cannabis sales up in Canada recently, it looks like 1.13 million, that's Canadian dollars, in June, compared to October of 53 million. I'm not sure that's right when they hit legal, 53 million. Fast forward to June, 91 million.
Yeah, those numbers, right? Again, I wonder about Canada, Chronic. It's been such a complex rollout, right? And they keep having to delay certain parts of the market with regards to, so those predictions so often, they can be a little bit misleading. I don't know.
No, that's a great point, because the round 2 up in Canada for legalizing concentrates and edibles, some topicals and tinctures has been delayed to mid-December. The revenue, however, added up. The licensed cannabis store revenue tallied $583 million in the 8.5 months since adult use began. And so what it's not showing, I guess, what this article is about to go into, is the future sales of beverages and topicals and concentrates that was supposed to go live in October that hasn't. First off, though, they talk about the supply issues. So there's been a lot of returned product due to just lack of quality. So the concentrate that was available wasn't good. Some of the flower was moldy, for example, returned by entire provinces like Quebec, just returned it, and individual stores coast to coast. So obviously supply issues are seen in every emerging state, right?
You're there, you're at the customer service desk, and who's there? Quebec. Right? My gosh, again, the nature, supply chain and distribution. So making cannabis is actually pretty straightforward. Making great cannabis, certainly, that's hard. Great hemp, great cannabis, that's hard. But distributing it in mass when there wasn't a distribution process, regulating it in mass, those are turning out to be essentially the critical linchpins in the marketplace. And those are the kinds of things that, again, at one level, very straightforward business. At another level, oh my gosh, talk about, professionals.
Right. And we just saw in Washington, there was a press release just issued about having marijuana 2.0 and getting rid of the seed to sale software tracking, try to implement something else. We've had just problem after problem that we reported on yesterday. So this Yahoo Finance article goes in to also say that investors' expectation for cannabis stocks has always been too high. There's been a lot of speculation because there hasn't really been a lot of opportunity. So we're starting to see a lot of money being thrown around and yet not a lot of revenue coming back. So we've reported several times about how Bruce up in Canada, CEO or previous CEO of Canopy Growth, was let go. Great deal maker, just didn't drive a lot of revenue. And so that's kind of the case. You're looking at Constellation. They're expecting a $54 million loss from Canopy Growth, as a matter of fact. So as you're trying to scale or come up with products, there's still a lot of money being thrown around. We're seeing marijuana firm Kushco secure a $50 million credit line. That's good. That's debt. Green Thumb completed a $60 million firm acquisition. So money is being thrown around, but Origin House revenues rise, but losses mount up, right? So Origin House posted a $21 million revenue increase, but also had a loss of $34 million. So they're losing more than they're generating. And that's the theme of a brand new burgeoning market kind of going up and parabolic, but you have to kind of look at that from a cautionary standpoint because it might crash fairly quickly. As we're seeing in California, some of those licenses are contracting. So just opposite of Canada onboarding, California did too, but they're starting to come down as some of those license applicants aren't wanting to move forward because of the unstable nature.
Oh man, this is the thing is, of course, what you read typically are kind of the high profile stories, right? On the ground, the grind, right? The tenuous nature of underfunded businesses coming into a startup space where you brought enough bread for 2 years of startup land and you're in 5 years of startup land, right? You're well past your money, all of this stuff. A lot of that is going on the ground. So the outcome, right? This is part of what validates what we do, is the whole thing of, again, you read some really neat stories about some really big deals. And at the same time, there's a whole lot of essentially distressed businesses in this industry. And, it's probably going to get worse before it gets better because of the way these things seem to go.
Right. It's easy to apply and then maybe want to sell the license and never have any intention of getting involved. And there's also the picks and shovels. We're seeing in New York, there's a marijuana REIT or real estate investment trust that just raised $141 million. And that's kind of an ancillary deal, right? Like McDonald's was really about real estate, not about flipping burgers. And a REIT like MedMen essentially is a multi-state operator, but it's a real estate investment trust. They're looking at property, plant, and equipment, not necessarily just selling products inside. It's kind of what is the assets involved. And so as the cultivators and distributors, manufacturers, they're all decreasing at 48%, 17%, and 29% respectively, we're seeing all of these other deals with astronomical valuations running around, with speculation frothing at the mouth, and yet the real business is struggling every day, like you mentioned.
Yeah, in the end, the people we're dealing with now, so the capital movers that I talk to now quite often, okay, the whole thing of, okay, yeah, what's their revenue like? Right? Because that really, and this is the thing, there are some interesting businesses out there that are actually making some money. But at the same time, gosh, not very many. I mean, really, when you go, again, are you red? Are you black? What are your numbers like? It's interesting to see how many people start, they hedge.
Yeah, and some are just forced to be kicked out. Like Weed Maps was advertising for all of the dispensaries that didn't have licenses. 18 months after Leafly voluntarily stopped, Weed Maps kept doing it until they were forced to stop. And there were thousands of dispensaries all over California. And yet there's this second contraction that's taken place over the course of 2019. And so basically what we're taking a look at is, that's probably going to be an issue with black market. But according to Marijuana Business Daily, the second round of license contraction led to a 48% drop in the number of active cultivation permits, 29% drop in the number of licensed manufacturers. And that's just from the end of 2018 to late August of 2019, with other segments also seeing smaller but significant declines. And so where are people going to go? I mean, the path of least resistance, right? That's probably going to be black market is my guess.
It sure, from a ease of use perspective, that's the thing that the governing bodies need to look at really in the end is if you make it too hard for everybody, it turns right back around to what you were trying to solve.
Right. Especially with the ban on CBD in California, you're limited. So there's a level of compliance requirements. There's permitting. There's a high barrier to entry, and often millions of dollars that we've seen people put in and not be able to generate a single gram. So it is volatile. There's probably a lot of people that just wanted to buy the license to try and sell it, kind of like the URL of the 90s when people just buy website domains and try to sell them for a profit. Maybe it'll work, maybe it won't. Time will tell. Come back to the Talking Hedge and find out. So with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.